Hey everybody, Smart Silver Stacker here. So the price of oil is up fairly sharply over the past several trading sessions, and one of the big catalysts here is that Russia looks like they may be cutting their oil production as we head into the new year as part of a response to the G7 price cap and the EU embargo that is ongoing, sort of a retaliatory measure. But that's not the only thing going on in markets. There are a number of other factors that are putting some upward pressure on the price of energy and specifically oil at the moment. And today I want to get into a number of those factors because not only is the price of oil likely to be much higher in the coming year, but also as a result, the price of many other goods, including commodities like gold and silver. And we're going to get into all of that in today's video. So let's get to it. Okay, so we're looking at the 5-day chart of the price of crude oil here, and you can see it's caught a pretty nice bid over the past several days. And if we look at the 1-month chart, you can see that coming off from the lows in early December, oil has moved up pretty considerably since that time. And part of what's going on, at least part of the recent spike, is related to this story coming out of Russia. They're saying that they may now cut oil production by up to 700,000 barrels per day. Now, this will be announced next week. This article from Reuters mentions that Russian President Vladimir Putin on Thursday announced that he would issue a decree early next week. So that's going to include Moscow's response to the G7 price cap and the EU oil embargo. Now, we may see production cuts. That's sounding more and more likely. But it's also possible that Putin may have some other tricks up his sleeve in response to the price cap. We'll find out next week, but certainly there is the possibility that that announcement could lead to some turmoil in global energy markets. I mean, Zoltan Pasar, he was speculating that Putin might even go so far as to price Russian oil in gold. Now, that certainly would be very disruptive indeed. I'm not saying we're going to see that, but we might see a little something more than just these production cuts, and it's going to be an interesting week for the price of energy. Now, to put those production cuts from Russia into context for you, this is some data from the EIA, the U.S. Energy Information Administration, related to global liquid fuels production. So I believe that that includes a little bit more than just petroleum production. I think biofuels and some other energy sources are included in that as well, but it gives you 1 million barrel per day equivalency here. And you can see that in 2020, now production was kind of declining there in 2020 for reasons that we don't need to get into, but I think you know what I'm talking about. Last year, 95 million barrels per day. 2022, it is forecast that we will have 99.98, so just about 100 barrel a day production. And then the forecast from the EIA for 2023 is 101 million barrels per day produced globally. So 700,000 barrels, slightly less than 1% of total global energy production. It's not a huge number, but also keep in mind that in a very tight global energy market, even seemingly minor cuts like that can make a big impact. Just think of the release of oil from the SPR that we had earlier this year. That was about 1 million barrels per day at its peak. And that had a significant impact on the price of energy. And so a cut of 700,000 barrels might seem small, but it could also have a big impact, especially in light of the fact that that release from the SPR is now likely over. And even if it's not over, even if we do see it persist into 2023 in some capacity, the SPR is starting to look a little tapped out. You know, when they started doing the release, I don't remember exactly when it was, but you can see here at the beginning of the year, it was closer to 600 million barrels, and today we're down to about 378 million barrels, so we've already used up a little over a third of the total SPR, and the midterm elections are over, so there's no more need to, buy votes by politicians by releasing oil with cheap oil prices, so I don't think that the SPR is going to get tapped into anymore. In fact, they're talking about filling it back up, so not only is that million barrels from the SPR now done, the 1 million barrels a day that was getting released, also they're going to be looking to purchase oil to refill it, so that's going to put some upward pressure on energy. And when you take away the 1 million barrels from the SPR and you add another 700,000 cut from Russia, you can start to see how these things can add up to have a significant impact on global energy prices moving forward. Now, another thing that is going to be putting significant upward pressure on the price of energy in the coming year and in the very near future is the reopening of China. Now, this is a chart from Google of Chinese COVID cases, new cases and deaths. And you can see we did have this spike up at the beginning of December. It looks like it's coming back down. I don't really know what accounts for that. The numbers coming out of China, I don't know if you can really trust them in regards to COVID cases. But one thing I do know is that they had one of the strictest lockdowns in place on the planet, and it looks like that's set to be relaxed. And so as they release those lockdowns, there's going to be a lot of people exposed, especially to this new Omicron variant, which is supposedly more virulent, less deadly, but more virulent. So probably going to see that run through the Chinese population in the near future. And that's going to have some interesting effects on the price of oil, because the reopening of the Chinese economy likely to cause oil to move higher. But before that happens, we may see what is referred to as a J curve in oil consumption. Here's an article from Reuters covering that topic. And to sum it up, I mean, the basic idea is that as China relaxes their lockdowns and they reopen their economy, there's going to be all these cases of the pandemic that run through their population, maybe take some workers out of the equation for a couple of weeks until they recover. But then once that is over, you're going to see a big spike up in the energy consumption. So first, a decline in energy consumption from China's reopening, followed by a big move up as daily life sort of resumes its normal pace there in terms of economic output, industrial output, people traveling. All of that is going to mean more oil and more energy consumed. And the forecast here is that eventually the resumption of normal day-to-day life there may lead to an additional consumption of more than 1 million barrels per day. So we've got the US SPR no longer putting 1 million barrels a day out onto the market. You've got Russia cutting production, and now possibly the Chinese sometime in 2023 seeing their oil consumption ramp up by an additional 1 million barrels a day. The Chinese are probably not too worried about this. They're going to have an abundance of cheap Russian oil to provide them with their long-term energy needs. And they've also sealed this deal with Qatar, I'm not sure how you say that one, or if there is an agreed upon pronunciation. But regardless, they've got a deal with them for 27 years to provide a steady supply of liquid natural gas. And of course, we all saw what the Saudi Aramco CEO said last year, that China's energy needs for the next 50 years are Aramco's highest priority. So the Chinese are going to get their energy. But in the West here, we may see continued tightness and much higher prices for energy. And that's going to lead to higher costs for a number of commodities. Think of food. There's a lot of energy inputs there. And also gold and silver, because mining gold and silver is a very energy intensive activity. You need a lot of diesel fuel to run all this heavy equipment, these excavators, these trucks that move ore around. And then the ore extraction itself requires quite a bit of heat and energy to be put into these ores. So you're either going to need a lot of electricity or possibly a lot of fossil fuels, but one way or the other, there's a lot of energy that goes into producing gold and silver. And so if we see the price of energy move up significantly in 2023 and remain there, have a sustained higher cost of energy, that means that the all-in sustaining cost for gold and silver miners is going to move significantly higher. And as a result, they're either going to not mine at these lower prices, or prices are going to have to move much higher in order to compensate the miners for that. And I would like to say a big thank you to SD Bullion. They've still got their fantastic end of the year closeout sale going on. Now, I mentioned the kilo bars they had. Looks like they've sold out of those. They had some nice kilo bars for about $1.49 over spot. But if I were to stack right now, I think what I would be looking at are these 10-ounce bars that they have $2.25 over spot. Pretty good deal for 10-ounce bars compared to what we have seen over the past several months. And also they've got silver Cougarans for $3.49 over spot. So pretty good deal for a sovereign coin. And as you saw earlier in the video, I am a fan of silver Cougarans. So two really nice deals they've got going on over at SD Bullion. If you're in the market for precious metals, go check them out. Help support the channel sponsors if you'd like to help support the channel. And the other big factor that is going to be leading to much higher energy prices is the continued breakdown of international relations, the continued deglobalization. So we just had President Zelensky of Ukraine visiting the U.S. and really ramping up the rhetoric there in terms of the U.S. cooperation with Ukraine. We're sending them Patriot missile batteries. We're sending them $45 billion worth of aid. And we are getting more and more involved in this conflict in Eastern Europe. Russia recently announced that they are going to ramp up the size of their military, and they will be expanding their forces. A significant portion of the Russian budget is going towards the military, so they understand that this conflict is likely to persist for possibly years to come. And this is a headline we got just the other day from Taipei in Taiwan about how Taiwan is scrambling jets to warn away 39 Chinese aircraft and 3 Chinese naval vessels that were inside of their territorial waters. And so, conflict around the world is continuing to march towards some kind of a culmination event. Whether that's going to come in 2023 is kind of hard to say. Certainly things are getting hotter, and the breakdown in global supply chains, the breakdown in global energy trade, the continuing trend towards de-dollarization, and that's on both sides. We're weaponizing the dollar in Western financial institutions, and on the flip side of that, Russia and China and the BRICS nations and their allies are looking to de-dollarize. They're selling U.S. debt, they're creating new payment systems to circumvent things like SWIFT, and there's no sign that that's going to end in 2023, and that is likely to lead to much higher prices for commodities across the board, whether you're talking about energy, whether you're talking about gold, silver, just about anything. That's going to put a lot of pressure on the U.S. dollar, and it's going to lead to higher inflation across the board. So this is like a self-sustaining circle. We've got higher inflation as a result of supply chains breaking down. We've got continued money printing. I mean, the Senate just passed a $1.7 trillion omnibus spending bill. Spending is continuing to run out of control. That bill included the $858 billion defense bill. That's the largest in history. There's just so many factors here undermining the dollar and that are going to lead to much higher inflation in the year ahead. And higher energy prices and higher commodity prices are just going to be a symptom of that. So that is why I am still stacking. Let me know what all of you think about the developments I covered in today's video. Thank you all very much for watching, and I will catch you next time. Smart Silver Stacker, out.